Welcome everybody to the Avatax webinar. My name is Tony Wright. I'm an account manager at Eureka Solutions. Many of you will know me as your own account manager. Today we're going to be talking about tax. A company tax return can be a complex document, as we all know. Completing the return and filing can be a lengthy and resource-heavy process. So any solution that can help has got to be a benefit for companies. This afternoon, I'm delighted to introduce you to the Avatar software team, Tariq, Mahmood, and Jake Estes, who will be presenting the benefits of automating this process with their Avatax sales tax software solution. Just a couple of pieces of housekeeping. The webinar will be recorded for future reference. Please feel free to ask questions via the live chat at the bottom of the screen. There will be time at the end of the presentation also for questions and answers. So without further delay, over to you, Tariq.
Awesome. Thank you very much there, Tony. So yeah, it's a pleasure to be here today to present how to sell into the USA, achieving the American dream. So a bit about myself. As you heard, my name is Tariq Mahmood. I'm a strategic alliance manager at Avalara. So I work closely with Eureka, and I have over 15 years experience working with various business management software providers, including working directly for NetSuite for 5 years. This slide provides an overview of the end-to-end tax compliance solutions Avalara provides. However, for this session, I will be mainly focusing on the middle column, which is our flagship solution called Avatax, which is our global tax engine solution capable of calculating US sales tax, determining VAT and GST, capable of calculating customs duties for cross-border transactions, and also managing exemption certificates. So the agenda I plan to talk through today is as follows. First of all, I'll talk about the US market and why there's a great opportunity to sell into the US. Then I will explain what sales tax is, what you need to consider when shipping to the US, followed by what you need to do to achieve sales tax compliance and how we can help you, including ongoing considerations once you are selling into the US. So looking at the opportunity for US commerce, I have a few stats here to share. So the US e-commerce market grew by about 14%, which means e-commerce now accounts for about 15% of all retail sales in the US. So that totaled just over $870 billion. So I'm sure you can appreciate how massive an opportunity it is to sell into the US. And nearly $1 in every $5 spent on retail came from digital, with 93% of people surveyed would have preferred to have duty included at checkout rather than on delivery. So some interesting stats there. Now let's understand what US sales tax is and some of the key factors you should bear in mind when selling into the US. US sales tax is an indirect tax on the sale of goods and services to the end buyer. Unlike VAT or GST, it is only levied on the final transaction with the customer and applies to all business-consumer, business-to-business, and business-to-government sales. The important thing to remember is the seller is held responsible for the calculation, collection, and remittance of tax to the appropriate authorities. 45 states have sales tax, and about 50% of a state's revenue is generated from sales tax. So they really do want every business paying them sales tax. But the US don't like to make things easy. There are over 13,000 tax jurisdictions across the US. So trying to calculate sales tax manually can be very challenging indeed. So this slide will illustrate the complexity of US sales tax. We will zoom into an area in the state of Colorado. And as you'll see, two neighbors buying the same product from the same store, yet they are charged different sales tax amounts. This is because even though they're in the same zip code, they can still fall into different tax jurisdictions, as highlighted on this slide with the shades of green and blue. So key criteria to consider when calculating the tax rate are, what is the item, where the item is, where the customer resides, and are there any tax holidays or need to exempt the transaction? Are those criteria required? And then to add to the tax rate complexity, the US applied over 250,000 changes last year in terms of rates, legislation, tax holidays, etc. So a rate at the beginning of the month could very well be different by the end of the month. Now I'll talk about different types of tax obligations you may have by selling into the US. The first concept is physical nexus. So the triggers on this slide means businesses would need to register in the relevant states, collect taxes, and file returns on any sales into the relevant states. If you have a property in a state, storing inventory through a third-party warehouse, these trigger physical nexus because you have assets in the state. If you have employees traveling to sell into other states or attending trade shows in another state, then these also trigger physical nexus. So to be clear, if you have physical nexus, you have an immediate need to register, collect taxes, and file returns in that state. In addition to physical nexus, there is now economic nexus, which came into effect following the South Dakota versus Wayfair 2018 Supreme Court decision. For those of you who don't know, Wayfair, the company, was selling to customers in the state of South Dakota without having a physical presence in the state, therefore wasn't paying South Dakota any taxes. South Dakota felt this was unfair and was owed tax from Wayfair, and therefore took them to court and won. This landmark ruling means all states, apart from Missouri, which will come into effect next year, have implemented economic nexus. So all out-of-state sellers will now potentially be liable to pay the state tax should they exceed the state's thresholds in terms of volume of transactions or sales revenue in a year. And these thresholds differ on a state-by-state basis. So you really do need to keep track of what you're selling, how much you're selling to customers in the different states to ensure you are not breaching any economic nexus rules. So a few things to mention. Exempt sales are included in the threshold. So this may include business-to-business sales for resale if you're working with wholesalers, and also sales you're making through marketplaces. It is your responsibility to ensure you are compliant with the different states' legislation. They will not notify you of the rules. So if you don't have nexus in a state, you must clearly display on checkout or invoice, and usually in the state's wording, you do not have nexus in the state. And it is the customer's responsibility to self-declare and pay taxes. In addition to this, some states mandate at the end of the year, you need to contact the customer with a summary of all the sales you've made to them to remind them they owe taxes to the state. So from a practicality approach, it can become difficult to manage. And any company who isn't compliant may incur penalties which range from time-consuming audits, fines, or in real severe cases, jail time. Then there's the massive complexity with product taxability of the items being sold in a state. I have a few examples to share. The first is in New York. Any clothing item or footwear sold for less than $110 is exempt from state sales tax, but not local sales tax. In the state of Pennsylvania, US flags are not taxable throughout the year, but as soon as they are sold with any other accessories or bundled with any other products, the entire purchase then becomes taxable. And during the back-to-school sales tax holiday, so this is a tax holiday during a specific period of the year, items like lingerie and transparent tape are not taxable as they are deemed to be necessary school items. Now I will talk about some of the considerations when shipping to the US. So before I start, I want to share with you some of the pain points and complexities we hear from customers when shipping to the US. 56% of customers experience delays at customs. 46% struggled with accurately calculating international duties and taxes. And as you can see on this slide, there are a few factors to consider when shipping cross-border. However, these are solvable when using the right solution to automate the processes. There are different thresholds for customs duties and import taxes. If I focus on the duty thresholds, particularly for the US, you can see at the bottom of the screen there, the threshold is $800 per order or consignment value. This is great for US consumers because they know when buying from international sellers, any order below $800 is tax-free or duty-free, shall I say. And then one of the biggest contributing factors towards businesses encountering challenges with customs delays is HS codes. As you can see in this example, the first 6 digits of an item is universal. However, the following 3 to 6 digits differ by country. So when shipping to the US, it is imperative the US HS code is used for all relevant customs documentation. This is what customs authorities will be looking at when defining if duty should be charged and ensuring the correct items are being shipped to the US. In addition, HS codes is what drives the duty calculation. And regarding the duty calculation, what many consumers look for is the ability to pay the duty on checkout and not when the item is received, as this can create a negative buying experience. Avalara recommends the DDP method, which is delivery duty paid. And what this means is the duties and taxes are calculated at the point of checkout. This gives the end customer a transparent buying experience with no additional surprise costs when they receive the item. So that quickly wraps up the considerations when shipping to the US. So the 5 steps on this slide are all steps Avalara can help you with when selling into the US. Step 1, understanding the nexus laws in the states you are selling into, so what your requirements are for registering and collecting taxes and duties. Step 2 is typically a straightforward process. And step 3, once you're registered, then you have an obligation to calculate the correct tax and duty amounts on the shipments, making sure whenever you make a sale into the state where you're registered, the correct amounts appear in the checkout or invoice or receipt or wherever else it needs to happen. Exempt sales need to be managed correctly. So if a transaction is exempt from tax, you need to make sure you have a copy of a valid exemption certificate for the transaction. And the final step, the relevant authorities expect returns to be filed and paid on time. So how can Avalara help? With step 1, researching your requirements, we have a variety of services to help you analyze your obligations. So this might be a nexus study to help you understand where you have nexus. If you have identified historical tax liability which needs resolving, we can help you understand exactly what that liability is to help you make the correct decisions to remediate and lower the liability. Another service is a HS code health check, which is very useful if you are in doubt of the HS codes you are using or plan to use. Touching on step 2, our compliance team can help you register with the correct states. And we have our Avalara tax research tool, which provides quick and clear answers to help you get tax right. This self-service tax research tool gives you access to comprehensive and up-to-date tax answers. So Avalara can automate the HS code assignment by integrating with your business systems. We use a combination of artificial intelligence and human expertise to ensure that we provide the correct HS code for each of your products for each of the countries you are shipping to. Avatax integrates with all source systems, whether it be your NetSuite ERP system, an e-commerce platform, point of sale, or billing solution. So at the point of the business process, when taxes are needed, a call is made to Avatax, which will assess the transactional criteria and throw back the correct rate instantaneously. We can help you manage your exemption certificates by storing them in the solution. When Avatax is assessing the transactional criteria, it will check with cert capture to determine if there is a valid exemption certificate, and if there is, it will zero out the tax amount. Since the certificates do expire, when an exemption certificate is due for renewal, the end customer will be alerted to log into the portal and provide a valid certificate. And then we also have a managed return service. So if you do not have the bandwidth to file returns yourself, we can do this on your behalf. Avatax will produce a liability report monthly. You review the report, and if you're happy with it, you approve it. We will then get to work to prepare and file the returns on your behalf. And we can also facilitate payment for you if need be. And as you continue to grow and sell into the US, this slide provides some ongoing considerations to be mindful of. Monitoring Nexus, so not keeping track of thresholds, as we can help you automate this, but more from an operational perspective. So if you open a new office, warehouse, store, or hire new staff in different states, this would trigger physical Nexus. If you launch new range of products or SKUs of existing products, you need to ensure you understand the product taxability and how that might apply to different sales channels, and correct HS codes are assigned. From the partners and sales side, if you are onboarding new customers or suppliers, make exemption certificates part of the conversation. And as part of the process, collect the exemption certificates when onboarding them. And if you're launching new channels, make sure you understand the tax process. For example, if you decide to sell through a marketplace facilitator, the marketplace is responsible for collecting and filing taxes. A lot of states will count the transactions towards the threshold which you would need to monitor. And of course, you would need to ensure all your channels are integrated into the tax system, because if you're filing returns and reporting to the authorities, they want to know about the company, not just know a specific sales channel. That being said, these are all things we can help you automate and monitor. We can partner with you to make sure you always understand your obligations, you are registered in the correct jurisdictions, you calculate taxes correctly, and also managing exemptions correctly, as well as filing returns correctly and on time. So a bit about Avalara. So we were founded in 2004 to help businesses navigate around the complexity of US sales tax compliance. Today, we have over 4,000 employees across 23 locations globally. So as a global company ourselves, we are in a prime position to help global customers achieve compliance, reduce risk, and streamline tax automation processes using our cloud-based software solutions. It's obviously my job to promote Avalara, but you don't need to take my word for it. Last year, IDC MarketScape carried out various assessments on tax automation providers, and we're very proud that Avalara was featured as the only leader in all three assessments when it comes down to providing a cloud-enabled tax automation solution. So for Avatax, we were leading both the small and mid-size and enterprise assessments. And then for our VAT compliance solutions, we were a leader in the VAT assessment. And then, to back up our solutions, we do work with over 30,000 customers spanning over 95 countries across multiple industries. And obviously on this slide, there's a snapshot of some of the brands and no doubt some of the brands you will recognize, particularly Oracle NetSuite here in this software and technology segment. So, Avalara, we live and breathe indirect tax. We have a best-in-class global compliance platform. Tax calculations are delivered in the blink of an eye by combining the power of our tax engine with the depth of our deep tax content and rules database. We automate the returns process from preparation and filing to remittance. We can manage exemption certificates for sales tax in the cloud. But I think what's key is we've invested in teams of CPAs and advisors to ensure content is up to date. And therefore, whenever any legislative changes are made, we apply those changes automatically and before the due date, ensuring our customers are always compliant. And then we have over 1,000 integrations. So with so many pre-built integrations, into NetSuite, into various other applications, we're most likely integrated into business applications used today or plan to use in the future. So that's me. Thank you very much for joining me today. I do hope you found this session useful. If you have any questions, my contact details are on screen, or by all means, please do reach out to your account manager at Eureka. So yeah, I think we still got a few minutes. So yeah, if there's any questions, please do ask.
Many thanks, Tariq, for a very informative presentation. We have actually received some questions from the audience, which I'm going to ask Jake Estes to help with, please. The first one is, we are a SaaS company and have to charge a reduced rate tax in Texas and Connecticut. Does Avalara support this?
Yeah, excuse me. Hi, everyone. Yeah, that we do. It's a good question. We refer to that as product taxability. And when you set up the Avatax or have Eureka, help you set up the Avatax bundle with NetSuite, part of what gets set up is the classification of your products or services to an Avalara code. And that basically tells us that you're selling software in Connecticut and to charge, I believe it's 1% there, and then a reduced rate in Texas. And so by basically classifying the goods and services you sell, Avalara takes care of the rest and does the tax lookups.
Thanks, Jake. Another question, we sell some accessories like perfume that we have import restrictions in some countries. Is this managed in the One World bundle?
It's not managed in the bundle. Tariq touched on this a little bit earlier. We have a classification service for HS codes, and as part of that service, we will inform you whether or not your products are subject to any import restrictions. So, perfume is often restricted in Middle Eastern countries where alcohol has a lot of restrictions on it, and perfume contains alcohol, of course. And so for something like that, we would classify the product with the code and then inform you that, you're going to have problems in the following countries. But it's not part of the bundle.
Okay, that's fine. Another question, our high value invoices get reviewed by several people before posting. Would this workflow require customization of the integration?
No, so within the NetSuite bundle, you're able to basically tell Avatax when to record the transaction, whether that's when one person saves the invoice or when there's an approval flow, with someone more senior. So that document wouldn't get recorded on Avalara servers until the invoice is posted by the final person.
Okay, yeah, I understand. Okay, that's the only questions I've got on the chat. The remaining participants, if anybody has any questions they'd like to fire out now. We will, of course, be following up with all participants via email and with a recording of the webinar so you can share with your colleagues as well. If there are no more questions, I'd just like to thank Jake and Tariq for the presentation, and thank you, audience, for your attendance and participation today. Please feel free to reach out to your Eureka Solutions account manager if you have any further questions or if you'd be interested in contacting Avalara software. Thank you all very much and enjoy the rest of your day.
Thank you. Bye.
Thanks. Bye.